What's your final trade?
So I said last week I would own puts in Alphabet if you are already long the stock. If you do own the puts, I keep them. I still think it goes lower.
Okay.
I said last week or Friday to buy Alphabet as my final trade. I'm saying again today, two winners in this race of an AI for everyday tools, Google and Microsoft. It's foolish to sell based on the bad launch.
Okay, down year to date along with Apple. We'll watch that. Jimmy, quick.
Union Pacific, solid industrial.
All right, good stuff.
Good day, ladies and gentlemen, and welcome to Stocks Intake, where we discuss different stocks, their fundamentals, and even their technicals. Today, we're looking at a very controversial stock, Alphabet, or otherwise known as Google. So they recently came out with a AI image generating tool known as Gemini, which turned out to be very controversial for them for different reasons. If you don't know about it, just go search it up and you'll know about it. But that tool that came out and brought out a lot of controversies wasn't really good for their stock and forced their stock to come down really significantly and set a bearish tone upon the stock. Although you could see a slight bullish trend setting out here, coming back right into the Keltner channel and touching the EMA, you could say this is quite a good bullish. This candlestick over here is quite bullish, and this curve, this turnover over here from outside the Keltner channel back into the Keltner channel is very bullish. So I do expect the stock to either consolidate or keep rising. And you can see, volumes over here peaked, were selling out pretty heavily and have been, steadying out or reducing over here. So just to update you guys on some of the controversy of the Gemini AI image generating tool, Vivek Naskar says Google co-founder Sergey Brin admitted that Gemini's image generation was messed up. He also said that they didn't do a proper testing before shipping. So that's very, very damaging for their reputation. Over here, Mythica Informed says you're messed up with the fiber of reality to fit in with your ideology. Joe Rogan and Dan Soder mocked Google Gemini's inability. And going on, Elon Musk then backed down too on this one. He says the sheer insanity of that actual response from Google's AI is staggering. So, is Google still a buy? In my opinion, it is definitely a buy. Just to remind you, Google has very deep pockets and they have some of the best talent working for them. They also have a moat around a lot of their products, such as the Google search engine. Everybody's used Google search. And just like Uber, they say, hey, let me Uber you, or I'm going to Uber myself. They're going to say, hey, I'm going to just Google it. So there definitely is a moat around Google, and everybody's used Google around the world. They have other products such as Android, the Play Store, YouTube itself. So many great products, and they have the tools and the deep pockets to throw as many darts as they want to at the board and see which one sticks. Just to go over the technicals over here, and the long-term trend over the last year, you could see that, or if you just see the last 3 years, it has definitely reached its highest point over here at 152. But then once that Gemini controversy came in, it dropped. And I think this could be a very good buying opportunity. Google is one of those stocks that's really trying to catch up this year to the likes of Nvidia, Microsoft, and all those other big tech stocks that are out there, the Meg 7 as they call them. A very attractive PE ratio at 23.4, and that's very attractive because a lot of tech stocks right now are trading at a much higher PE ratio than Google is. So if you're looking to jump onto the bandwagon, as I call it, this Google is a great stock to get into right now because they're not going anywhere for a long time. And they're definitely putting their foot into, and they're putting it deep into the water of AI. Moving on to Union Pacific. Now, Union Pacific is a beautiful stock in my opinion. They are a value stock, and they dominate the railroads industry in the US. They operate in Canada as well as parts of Mexico. They operate and control most of the Mexico's gateway from the U.S. And just to go through their 10K over here, I had something really nice for you guys over here, just to show you how the stock operates. Financial results 2023, just to give you a summary of it. They say in 2023 they face soft consumer market, inflationary pressures, new labor agreements, fluctuating fuel prices, operating issues, and so a very bearish trend. So they also gave out a sort of a 2024 outlook. As you can see, what they expect coming up in 2024, and they say macroeconomic uncertainties remain in 2024. Again, another bearish tone that could have a material impact on their 2024 financial and operating results. So they're setting out a very bearish tone and putting their expectations for investors at rock bottom. And I think they're doing that purposely so that they can come in and beat their expectations. Looking at their technical stocks over the past 1 year, look at it, 23.38%. This stock has been moving for a kind of stock that it is, a value stock that pays a dividend. It pays a dividend of about 2.09%. And over the past 5 years, you can see it's pretty steady and trading sideways. It reached its highest point over here in 2022, 1st of March, and then came down after the results, and after about 23rd October 2023, it started going up again, and it's reached its highest point ever since then, without even taking a break. So this is a very bullish trend. This curve over here, this continuous rise, it's moved up above its 50-day moving average, its 20-day moving average. Very attractive position to be in, and if you've been in this stock for a while, you'd be very proud of yourself, in my opinion. Good returns over a long period of time, good dividend paying, great management, experienced management team that has proved itself over and over again, very intelligent, good decisions that have been made at the company. Just a short article over here on Union Pacific that says Union Pacific has outperformed the ZAX transportation rail industry over the past year. They have the company's efforts to reward its shareholders in current uncertain scenario are encouraging. UNP bought back shares of 700 million. So not only are they buying back shares, they're paying dividends on top of that. So that's very enticing for any sort of investor, and that's why I say this is it's a high quality stock that you want to get into and hold for a long period of time to get real value out of this stock. It has a strong free cash flow generating ability. So that's also another a great sign that the stock is a value stock, as well as it's a value stock, and at the same time it's not one of those stocks that's highly volatile. So very steady, low risk, if you may call it. PE ratio, great PE ratio, 23.87 in an industry that is very labor intensive, unionized, as well as a lot of machines operating, and so high cost bases. So this is a very enticing PE ratio. Shows great it's very undervalued, in my opinion. Yes, their total revenues is also very steady right throughout, but staying between 21 and 24 billion dollars. Their net income staying around 6 to 7 billion every year. Their operating income, they're positive, or they're net positive on their operating income. So they're not only making money on their revenues, but even through operating income. And so yeah, this is a great stock to hold, in my opinion, over a long period of time for that. So thank you very much for joining me for today's video. I hope to see you in the next video, and please do subscribe, like, and share this video.